tell you what happened on the Lal Street today as far as Indian markets go. We've ended lower. It's happened for a second straight session on the trot. It happened on Friday. Now it's happened on Monday too. And the Nifty has shut shop below 17,300. The Sensex has gone home after losing 200 points at the end of trade. Sectorally, all the indices closed with a negative bias. And of course, the exception was the IT sector, which did pretty okay for itself today. It's seen an up move of more than 1%. But the broader markets have seen some amount of pressure. They have been underperforming compared to the benchmarks. The FMCG index has declined, and now you're seeing a decline for 3 sessions on the trot. I spoke about IT, the best performing sector of the day by far. But what's happening in the mutual funds universe? Now, that is the other big news story of the day, because we've looked at data on mutual funds for September. And mutual funds, it seems, have snapped the 2 months of net inflows, despite what we're seeing in equity inflows in September. The equity inflows have been rather robust. The SIP inflows, on the other hand, have hit a record high. And this time it's come in. The number is 12,976 crore rupees. That's the SIP number that we are seeing for the month of September. We had a chance to speak to NS Venkatesh, the CEO at AMFI, about the retail SIP and what strength one can expect from the retail segment going ahead from here. This is what we got from him.
Yeah, the SIP numbers are doing very well compared to the last month. This month it has gone up to 12,900 and odd crores. So if you look at it from that angle, we are reaching 13,000 crore. We are just 24 crore shy of 13,000 crore. And this entire SIP is retail. There's no institutional thing coming in from SIP. So it is purely retail. And anecdotally, if you look at it, the flows are at least around 90 to 91% in equity only. So if we look at the major thrust, it is towards equity.
All right, so a lot of numbers have come in because there are various kinds of funds. So how are investment patterns changing? Let's connect with Sharad from our research team, and he's here to break down the AMFI data that we've got for the month. Sharad, do tell us about the kind of picture that emerges on mutual fund investments. How's it looking?
Well, yes, the focus would be on the SIP numbers, and the numbers are coming at record levels. Now, if you see, the number is almost 24 crores shy of the 13,000 crore mark, and for the almost 5 months straight, the numbers have been above the 12,000 crore mark. So very strong SIP collections coming in at also record levels. Now, apart from this, now let's focus on the net flows overall for the month of September, and we see over here there's an outflow coming in of almost 41,404 odd crore rupees. Of course, the pressure is coming in from the debt fund side in the duration funds as well as money market funds as well. Now let's go into the equity inflow part. That has been very strong, and for the almost 19th straight month itself, we'll see there has been a positive flows coming in on almost 14,100 crores coming for the month of September as well. Now let's look at the AUM portions. The total AUM portions at record levels coming in at almost 39.9 lakh crore rupees. And let's focus to the equity AUM portion. Over here we see here also the numbers are at the record levels coming in at almost 15 lakh crore AUM mark. And apart from this, do remember a new fund offers also came of almost 8,000 odd crore rupees, and 21 odd schemes were launched. All equity segments had positive inflows and strong inflows coming in sectoral thematic funds.
Thanks very much for that, Sharad. Now let's get perspective on the kind of numbers that have been reported. And for that, Lakshmi Iyer is joining us. She is President and CIO for Debt and Head of Products at Kotak Mahindra AMC. Great to have you with us this evening, Lakshmi. Now, these net equity inflows into mutual funds, I'm seeing they have surged 130%, and this month on month. What are the reasons this is happening, despite the kind of volatility we've seen in the markets, the dark clouds of uncertainty that lie ahead? Because at least from July to August to September, that graph, it has been rising upwards quite steadily, and yet the net flows have turned negative. So how does one read into that?
So a couple of things, which to our mind are playing out in the minds of investors. A is that, yes, you're absolutely right. There is high-end volatility, but that volatility, A, is not restricted just to equities. It's not restricted just domestically. It's happening globally across asset classes. In fact, this time on, if you see, global bonds have had the highest drawdown since 1980. So you've seen US Treasury funds actually underperform maybe thematic funds or tech funds like Nasdaq year to date. So given all this, and then of course inflation is on the rise. So given all this, which is the asset class which has the tendency to outperform inflation, maybe not near term, but on a long term basis, and the answer clearly rests with equities. So I think these are some of the reasons why the markets are tending to be a buy on dips. September was a volatile month, closed down on a net basis. Sectors corrected much more than the broader markets. All of that has led to renewed flows into equities, both lump sum, but I would say to a larger extent through the SIP route.
And the three NFOs that have done well in the month of September, or at least reasonably well, they're either sectoral or thematic funds, Lakshmi. How do you read into that trend?
Absolutely, you spoke my mind. If you see the dissection of the net flows, also bulk of the flows actually belong to the sectoral thematic category, followed by the flexi cap. So the writing is clearly on the wall. There are asset allocation strategists at play, maybe at the advisory level or at the individual investor level, who are taking thematic calls given the kind of great rotation that we are seeing consistently from the market perspective. And that is leading to, and some of the sectors have corrected way higher than the broader markets. So this seems to be a trend which investors seem to have a liking, not just in India, but also globally. So seems like we are mirroring that kind of a trend aside about the large cap category, which seems to be the market's favorite, especially at times of volatility.
What choice of funds, the kind that you're suggesting to investors, how are you helping them pick between sectoral funds, flexi cap, mid cap funds? Because those are the ones that are getting the maximum traction, at least from the data that I've been looking at for the month of September. Is that the flavor of the season, so to speak?
Investments in equities, unfortunately, cannot be perceived as, the flavor of the season, like you have ice cream, which it is, selected. It's very important to keep in mind that a sectoral stroke thematic fund comes with a slightly more concentrated theme at the portfolio level. So the tendency of the risk factor in that is a shade higher than probably a large cap fund or a flexi cap fund. So one needs to keep that risk appetite in mind when you are allocating, and clearly this has to be from a long-term standpoint. Having said that, as I mentioned, when you are deciding your overall portfolio mix, have the right mix of the entire market capitalization, which is what a flexi cap allows you to do, and of course a combination of large and mid cap strategy, and definitely have sprinklers of the thematic stroke sectoral strategy. I think that would be a better way to really construct your overall equities portfolio rather than having thematic or sector as a core of your asset allocation.
Fair enough. That's sage advice. Thank you very much for joining us with that, Lakshmi Iyer. It's always a pleasure talking to you. Thanks.